And before I ask the next question, what are some things that you need from your clients across the board? What does that look like?
Yeah, so the kind of what I think me and Kelly have defined is that workflow process. And so not only does the bank have particular criteria in what regards to what steps need to be completed or done as we move through the process, but because of our relationship and we've done many of these over the years, that process tends to be pretty smooth. And it starts with typically obviously client identifying a practice to purchase, getting at least a letter of intent in place, an LOI, and then we start then collecting financials from both the buyer and the seller. And so the bank will measure in two ways, and I'm trying not to use too many banking terms, but we do a global analysis and we do a standalone. And so at that point, that gives me the ability to run all the kind of preliminary analytics to determine, hey, where are we in the deal? Does this make sense for the bank? Does this make sense for the client? Before we spend an enormous amount of time, we try to kind of do some of the heavy lifting early before we ask a lot from all parties. And so at that point, we're not really pulling customers' credit yet, but we're just getting a feel for, okay, let's look at their tax returns, let's look at the financials of the company, and let's make sure it fits within the different lending programs that we have. And we can tailor those, as Kelly said earlier, to be specific and purposeful in how we put together a deal. And so once we've identified whether or not, this meets all the preliminary criteria that we would need, at that point we would ask Kelly and her team to get more formal with the actual purchase agreement and potentially starting some of their due diligence as we work through the final underwriting. Once kind of those both parties have agreed on their end, we've gotten final approval, then it's a matter of just getting through closing conditions, a checklist that we provide to the clientele that goes over that.
One of the things, Anthony, that I kind of wanted you to touch on is because there sometimes is a misunderstanding about a dentist owning a practice. So dentists think, okay, I'm going to buy this really successful practice. The practice is going to carry it. Like I'm going to show what this practice is doing. The bank is going to fund it no matter what. They're going to fund it because the practice is just, it's crazy great. And I'm able to do the work. I can do all of the procedures, but that's really that is a big part of it. But dentists also have to qualify for the loan. Like a lot of them think, oh, it doesn't matter that I have a lot of debt or stuff like that. The practice is going to carry the loan. Well, that's not always true. There are certain things that the actual dentist needs to meet criteria in order to be under the loan. So Anthony, if you can explain a little bit about that, because I think there is a misconception out there that I'm someone and I have $1 million of debt and I'm a dentist and I want to go and buy a $2 million practice that's going to pay my debt, obviously, once I own the practice. What do you guys look at when you see that? When you see the $1 million of debt on the dentist?
Yeah, so to touch on that, the biggest thing for us, and I've worked for other banks with dental specific lending programs. There's not a particular threshold in regards to how much debt we will allow a client to have or we'd like to see. There's not a specific percentage of liquidity, meaning just cash that on hand that we would like to see, where other banks do as well. And so we look at it holistically, and we sit down and we have real conversations with our approvers and say, hey, number one, we love dental deals, and number two, we're going to use common sense. And so if we get to a point where we believe that we're going to have the potential, if there's a hiccup at all in the company, to put not only the business in jeopardy, but their personal livelihood, and these docs have families and other things involved on their personal financial side, where we can put them in a position where something could be greatly affected by a small dip in performance or something in that event, then we're probably going to be hesitant. And so there's not a fine line as to what that means. You can only have 700,000 in total personal debt. That's not really the case. We'll look at it and sit down and have a real conversation with the client as well, and say, hey, this is where maybe where we're concerned, and this is kind of what we determined to be maybe a current hurdle. Is there any mitigants to this? What's the story behind it? How did this happen? And kind of go through that process. But as Kelly said, there are many occasions, or not many, but there are often occasions where a doctor is making a current level of income as an associate, but yeah, where they may be a slightly overextended. And so once we factor that their existing debt in with a new debt that this practice will now have to carry, those ratios that we look for tend to get to get weighed down. In addition to that, every bank will typically stress test a dental deal during an acquisition. There's historical evidence that, not always, but in many cases, there is a small revenue trend in the declining range, and so we stress those at a small percentage. And so when a client does their own personal EBITDA or cash flow calculation, they may determine on their own that it does just fine, and there's no concerns. Any bank, every bank, SBA, regardless of who it is, will stress those loans. And so I think just making sure they're aware of what that looks like.
Right.
We're definitely not the most conservative in regards to other deals versus dental. We actually are pretty open because the default rate is extremely low. But with that said, it's not just I want to buy the practice and every bank in town would love to have my business.
Yeah.
Most banks would love the opportunity to try, but they're probably going to get more no's than they foresaw, unless they're working with someone who's, number one, done dental deals before, has experience in the industry, knows what questions to ask, and is working with a bank that in that same capacity that knows the industry well, knows the market well, and can really tailor a deal to fit.